Hello everyone and welcome back to our channel. Today we're going to be discussing China's economic situation and why many experts, including Ray Dalio, believe that their collapse could be far worse than we think. For those of you who may not know, Ray Dalio is a billionaire investor and the founder of Bridgewater Associates, one of the world's largest hedge funds. He has recently been warning about the potential economic collapse of China and the impact it could have on the global economy. In this video, we will discuss some of the reasons why Dalio believes that China's economic situation is far worse than we think, and what this could mean for the global economy. We will also look at some of the potential consequences of a Chinese economic collapse, and how it could impact various industries and countries around the world. So, let's dive into the topic. China's economic growth over the past few decades has been remarkable, with the country becoming the world's second-largest economy and lifting millions of people out of poverty. However, in recent years, the Chinese economy has been showing signs of slowing down. The country's GDP growth rate has been declining, and its debt-to-GDP ratio has been steadily rising, causing concern among many economists. In fact, China's debt-to-GDP ratio is now higher than that of the United States, which is a cause for alarm. One of the biggest issues facing the Chinese economy is its real estate market. While China's property market has been booming for years, it has also created a massive bubble. The prices of homes in major cities like Beijing and Shanghai have skyrocketed, making it difficult for many people to afford housing. This has led to the creation of ghost cities, which are large housing developments that are completely empty. This has caused concerns about the stability of the Chinese real estate market and the potential for a collapse, which could have serious consequences for the global economy. Another issue facing China is its aging population. The country's one-child policy, which was in place for decades, has resulted in a rapidly aging population. This has put pressure on the country's social security system and could lead to a labor shortage in the future. Additionally, China's workforce is becoming less competitive as wages rise, which could result in a decline in productivity. These factors, combined with the country's debt levels and real estate market bubble, have led many experts to warn about the potential for a Chinese economic collapse. It is worth noting that China's government has taken steps to address some of these issues. For example, they have relaxed the one-child policy and implemented policies to boost domestic consumption. However, more needs to be done to ensure the long-term stability of the Chinese economy and to mitigate the risks associated with a potential collapse. These reforms are crucial not only for China's economic future, but also for the global economy, as China is a major player in the world economy and its collapse could have serious consequences for various industries and countries around the world. If a Chinese economic collapse were to occur, it could lead to a domino effect of economic downturns across the globe. The interconnectedness of the global economy means that a decline in demand for goods and services from China could lead to a decrease in production and employment in other countries. This could result in a global recession, similar to what happened during the 2008 financial crisis. The impact of a Chinese economic collapse would be felt most heavily in Asia, where many countries rely heavily on exports to China. For example, South Korea and Taiwan would be hit the hardest, as they are major exporters to China. Additionally, countries that rely on China for raw materials, such as Australia and Brazil, would see a decline in demand for their products, which could lead to a decrease in production and employment in those countries. The United States would also feel the impact of a Chinese economic collapse. China is the United States' biggest trading partner, and a decline in Chinese demand for American goods and services would hurt the U.S. economy. Additionally, the U.S. dollar could strengthen as investors seek a safe haven during the crisis, which could hurt U.S. exports and the manufacturing industry. The impact of a Chinese economic collapse would also be felt in the global financial markets. China's stock market is the second largest in the world, and a collapse could lead to a decline in global stock markets. Additionally, China holds trillions of dollars in foreign reserves, and a collapse could lead to a decline in the value of the US dollar and other major currencies. This could have serious consequences for investors and could lead to a global financial crisis. In summary, a Chinese economic collapse could have far-reaching consequences for the global economy. It could lead to a decline in demand for goods and services, a decrease in production and employment, and a global recession. The impact would be felt most heavily in Asia, but it would also have serious consequences for the United States and the global financial markets. It is important for investors and policymakers to pay close attention to the situation in China and to take steps to mitigate the risks associated with a potential collapse. This could include diversifying investments, reducing debt levels, and implementing reforms to the global financial system. Dalio's suggestion of shifting China's focus from investment-led growth to consumption-led growth is based on the idea that it would help to rebalance the economy and reduce its reliance on debt. This shift would require significant reforms to the country's financial system, including the creation of a more transparent and efficient banking system, the development of a more robust regulatory framework, and the implementation of measures to reduce corruption and improve corporate governance. While these reforms may be difficult to implement, Dalio argues that they are necessary for the long-term stability and growth of the Chinese economy, as well as for the health of the global economy. By reducing China's reliance on debt and rebalancing its economy, the country would be better equipped to weather economic downturns and avoid a potential collapse, which would have far-reaching consequences for the global economy. It is important to note that China has already taken some steps towards this shift, such as implementing policies to boost domestic consumption and reducing its reliance on exports. However, more needs to be done to ensure the long-term stability of the Chinese economy and to mitigate the risks associated with a potential collapse. These reforms are crucial not only for China's economic future, but also for the global economy, as China is a major player in the world economy and its collapse could have serious consequences for various industries and countries around the world. Therefore, it is important for policymakers and investors to pay close attention to the situation in China and to take steps to mitigate the risks associated with a potential collapse. This could include diversifying investments, reducing debt levels, and implementing reforms to the global financial system. By doing so, we can help ensure the long-term stability and growth of the Chinese economy and the global economy as a whole. In conclusion, China's economic situation is a complex issue that could have serious consequences for the global economy. While some experts believe that China's economy is strong and will continue to grow, others, like Dalio, believe that a collapse is imminent. If China's economy were to collapse, it could lead to a global recession and could have serious consequences for various industries and countries around the world. It is important for investors and policymakers to pay close attention to the situation in China and to take steps to mitigate the risks associated with a potential collapse. This could include diversifying investments, reducing debt levels, and implementing reforms to the global financial system. We hope that this video has given you a better understanding of the potential impact of a Chinese economic collapse and why experts like Dalio are so concerned about the situation. Thank you for watching, and we'll see you in the next video.